It started with a whisper, a rumor of a bank in trouble. But within weeks, the whisper turned into a roar. A global banking crisis was unfolding, and nobody saw it coming. In the span of just 10 days, three major banks failed. The speed and scale of the collapse caught everyone off guard. As the news spread, people lined up outside banks, desperate to get their money out. The scene was chaotic, with some banks running out of cash. The failed banks held over $1.2 trillion in deposits. The question on everyone's mind: what happens to all that money now? Regulators scrambled to respond, holding emergency meetings to discuss the crisis. But their actions only seemed to make things worse. Interest rates began to soar, making it even harder for banks to borrow money. The crisis was spiraling out of control. The stock market was in chaos, with investors dumping bank stocks and seeking safer assets. The volatility was intense, with some stocks losing over 50% of their value. The crisis was no longer just about individual banks. It was about the entire financial system. The risk of contagion was real, and regulators were running out of options. As the crisis deepened, trading floors emptied, and markets began to freeze. The global economy was on the brink of a meltdown. The question on everyone's mind: will this crisis trigger a global recession? The answer, unfortunately, is still uncertain. Economists are warning that the crisis is far from over. In fact, it may be just beginning. The world is holding its breath, waiting to see what happens next. One thing is certain: the banking crisis will have far-reaching consequences. The only question is, how bad will it get?